This episode is brought to you by LifeLock. So much of your personal info is out of your control, like your insurance provider that has your social security number and your favorite retailer that has your payment details. If they get breached, your information, your identity, is vulnerable. That's why LifeLock monitors millions of data points a second for threats. If your identity is stolen, they'll fix it, guaranteed or your money back. Save up to 40% your first year at LifeLock.com/podcast. Terms apply.
Hey, I'm Ryan Reynolds. Recently, I asked Mint Mobile's legal team if big wireless companies are allowed to raise prices due to inflation. They said yes. And then when I asked if raising prices technically violates those onerous two-year contracts, they said, "What the f*** are you talking about, you insane Hollywood ass?" So to recap, we're cutting the price of Mint Unlimited from $30 a month to just $15 a month. Give it a try at mintmobile.com/switch.
$45 upfront payment equivalent to $15 per month. New customers on first 3-month plan only. Taxes and fees extra. Speed slower above 40 gigabytes. See details.
It's the Larry Kudlow Show. Free market prosperity starts here. Now, here's Larry Kudlow.
Welcome back, folks. I'm Larry Kudlow. You can live stream us on the internet, LarryKudlowShow.com, LarryKudlowShow.com, all across the country, around the world, throughout the solar system. That includes the Milky Way. And during the week, please join us. Fabulous Fox Business. Name of the show is Kudlow, 4 to 5 p.m. every day, Monday through Friday. And if for some reason you can't make it at 4, just text your favorite 9-year-old, and she will show you how to DVR the show. We bring in Nancy Tengler, CEO and Chief Investment Officer of Laffer Tengler Investments. Her latest book is The Women's Guide to Successful Investing. Nancy Tengler, I'd say the welcome mat, the stock market welcome mat, was out for Donald Trump. Dow was up 1,937 points, 1,501 day. That was Wednesday. Everything was up big time, about 5 or 6%. And on balance, I might add, bond rates went down. What do you make of it?
Yeah. Well, hey, congratulations, Larry, on your call for growth. And I think that's what we're going to get with this administration. I think that's what the market's reacting to. So if you and even riskier assets like Bitcoin were up, the dollar kind of rebounded. So I do think it will matter what happens in the House for sure. But I think what investors are seeing is lower levels of regulation, potentially lower corporate taxes. And you and I talked about this a few weeks ago. You know, after the Tax Cut Jobs Act, and I know you know this because you were integral, but, you know, corporate receipts went from $200 billion to $400 billion. Mm-hmm. And so when you incent companies to repatriate cash and onshore manufacturing, et cetera, what you see is that they end up growing earnings. And we've seen that this quarter. Earnings, in my view, were pretty darn good. So they return their activities to the U.S., and that benefits the government corporate tax receipts. And so they should be grateful and understand the value of incentives because, you know, where would you go if you ran a business? You'd go to the lowest tax environment if you possibly could. So I think this is going to be all good news, lower energy prices, which may or may not be good news for, you know, energy companies, but we'll see a relief on the biggest tax of all, which is inflation.
You know, it's a big gainer. 8.5% was the KBW Bank Index. Now, that's the big banks. But I think you have less regulations and the corporate tax cuts you described before. That's a terrific combination. And I think that the Trump administration, once they get around to fixing up the Federal Reserve and the FDIC and all the bank regulators, they're going to stop telling banks how to lend. They're going to say you lend where you want to lend. We're not going to stop you from making loans to fossil fuels, et cetera, et cetera. I think bank stocks love that.
They do, and I think what we've seen is that the shadow banking system has stepped in for the banks, and I mean that there's nothing wrong with that, but I do think it's important to see banks returning to their core competencies. But one of the leaders was one of the stocks we own, and that's Goldman Sachs, because I think one of the other things people realize is that M&A will return to the forefront. This FTC has been pecuniary, difficult in every aspect. So I think that's good news. But also, I heard you earlier with John Carney about I'm sure you had better things to do than watch the Fed chairman's press conference. But I was struck by the way he responded. It wasn't that he said, no, I won't step down. It clearly struck a nerve, and he said no, and then stared down the reporter. and I just thought that was not becoming. Like, I think the answer is, I would certainly engage with the president-elect, but no, we don't have that. We have a not humble, arrogant Fed that has made misstep after misstep. And just this morning, Neil Kashkari came out and said, I think, since the economy is stronger than expected and productivity, things we've been talking about for years, you and I, productivity is strong. We may not have to cut rates as much. And so I don't know where their North Star is, Larry, but I'd like them to get out of the way of of Fed policy or monetary policy, and let the grown-ups in the room take over, the people that run the companies and have to turn in earnings every single quarter, whether they want to or not.
The Fed has bungled everything. I mean,
yeah.
He went on to talk about the Fed chairman, Jay Powell, was talking about all these models and algorithms. It's all a lot of crap because they missed everything. I mean, where was he to warn in 2021 with the economy booming? Where was he to say, no, we don't need a $1.9 trillion spending bill? Where was he? Now, he seems pretty quick to say, we're so smart right now, and we'll have to model tax cuts and deregulation. They can't model tax cuts. The entire U.S. government has bungled it. Tax revenues soared after the tax cuts of 2017. They don't model anything right. I mean, there was arrogance is beyond. Look, the way that game works, just for you, and you may know this, but listeners, the Fed chairman will meet with the Treasury Secretary. There'll be a new one, Scott Besson, somebody like that, every Friday. That's the usual way they've done it in the past. The NEC director meets once a month, maybe twice a month, but usually has a lunch once a month. And then the CEA chairperson will meet with the Fed staff, I guess, once a month, 2 months, I don't know. But the point is the Treasury Secretary and the NEC director have constant meetings with the Fed chairman. So he would be wise, it seems to me, Jay Powell, to show just a little bit of humility, since Mr. Trump just won the biggest landslide in many, many years, swept 3 houses, for heaven's sakes. All right, and the Fed is they're independent, Nancy, but they're not independent of the planet. You know what I mean? I mean, they are part of the American government. That, by the way, the Fed reports to Congress. It's going to be Republican Congress, Senate, and House. So I'm just saying, he was pretty grotesque in that press conference.
I would agree, Larry. I would.
Nancy, can this rally, this is the post-election euphoria, post-election change of policy. How long does this rally continue?
Well, I think we're in the early years, not days, of the bull market. You're seeing it in the corporate earnings. I just sat with my team yesterday, and we went through all the earnings of the companies we own. And by a vast majority, not only did we see beats and raises, but we saw margins expanding. So if you back out the 2020 distortion from COVID, margins are at historic highs. And the reason that can continue is because of generative AI and the implementation of all of these technologies like robotics, cloud computing, and those areas are continuing to grow, and companies are employing generative AI. So I think, I've drawn the analogy to the 90s, not the part where the market collapsed in 2000, but the part where we had productivity growth. And and Fed Chairman Greenspan, as you know, sat on the sidelines. I mean, there was a pretty serious hiking regime in 94, but then they cut twice, two 25 basis point cuts in 95 and let the economy run because they understood that productivity-driven growth can be non-inflationary. I don't know what this Fed understands, to your point. You said, the modeling, they're talking about data. I don't know why you would cut 50 basis points when you haven't met your target for inflation, and the jobs market is not horrific. It's actually good. It's just not great.
Actually, I would take Chat GPT over the Fed models. What the hell?
Actually, I wrote a piece called "It's Time to Replace the Fed Chairman with Chat GPT."
I'm telling you,
about a year ago.
I'm all for it. You know what I mean? He's talking. This guy's talking about algorithms, and the market's just shaking. The knees are shaking. Don't do it. Don't do it. It's Nancy Tengler.
Stop having press conferences.
And ChatGPT over the Fed's algorithms. Nancy Tengler, CEO and Chief Investment Officer of Laffer Tengler. Thanks, Nancy. We appreciate it. Going to take a quick break, folks. And on the side of the break, Paul Stone, Chairman and CEO of Colonial Metals Group, will be here, right here in studio. I'm Kudlow. We'll be right back.
This is the Larry Kudlow Show.
Eden Memorial Chapels understands Jewish funerals can take many forms. Some are Orthodox, while others are more conservative or of a Reformed nature. There's no one better. With services close to all New York and New Jersey cemeteries, Eden Memorial Chapels offer fair and balanced pricing and can provide easy transfer of you and your loved ones to Israel. While you're grieving, they're here to take care of all the details so that you deal with less bureaucracy and have more peace of mind. Go to EdenMemorial.com. That's EdenMemorial.com.